You need to talk to somebody who's seen some cycles before, who's managed through these markets. And our next guest is certainly one of those folks. David Kudla, he's a founder, chief executive officer, and chief investment strategist. As I like to say, he's the boss at Mainstay Capital Management from lovely Troy, Michigan. Hey, David, what's the conversation you're having with your teams? I bet you there's some folks in Mainstay Capital that haven't seen some of this volatility before. What do you say to your teams? What do you say to your clients these days?
Well, you know, when we look at the markets that we've been in this year, and it's reminiscent, starting to become even more reminiscent of 2022 in terms of certainly what's happening with stocks and just the volatility in bonds. They're faring a little better, but the volatility in bonds. And so, you know, when we talk to clients and we talk among the team, we talk about these different levels of investments or different levels of investing. We call level one is indexing, just S&P 500 index fund. That's worked very well over the past couple of years, and it's worked well over very many years because you own large cap stocks that have done well. From there, you go to maybe a buy and hold approach of a more diversified portfolio than the S&P 500, level two. Level three, maybe add periodic rebalancing to that. Those all work fine in a bull market. In a year like this year, 2022, other years, we have what we call level four investing, and that's tactical asset allocation. That's where investors need to be right now. They need to be investing at level four. And that's important because with the volatility in stocks and the downside volatility we've had, the volatility in bonds, we can look to other areas like liquid alternative investments, gold, market neutral funds, long short strategies, hedging strategies, significantly overweighting Europe. Those things that are far beyond just a domestic S&P 500 indexing or a domestic stocks and bonds.
Right. So when you have a client say, the S&P 500 is falling, shouldn't I buy the dip? Isn't that, the Warren Buffett advice is to continue to keep buying even throughout downturns? What do you say to those clients when you want them to maybe be a little bit more tactical?
Yeah, so, dollar cost averaging always works well over time. And for those participating in retirement savings plans at their workplace, a 401k plan, they're getting that automatically through payroll contributions. But in terms of the rest of your portfolio, that tactical part, it's more of not as much market timing as maybe sector rotation or asset class rotation. But the key is we need to move beyond, and this is what we advise our clients. We need to move beyond in a year like this, or in 2022, another good example, those traditional asset classes of stocks, bonds, and cash, and look abroad, which we haven't done in years to a significant degree. We have portfolios this year that have 3 times as much international exposure that they would have had this time last year. And so a portfolio starts to look very, very different in a year like this. I don't want to say a hedge fund strategy but certainly looking beyond traditional asset classes. It's key in a year like this because there's areas that are delivering positive returns, with a bond market that's about flat with a lot of volatility and a stock market that's down 10% this year.
Hey, David, does level four investing, the tactical investing, does that mean kind of asset allocation changes for you?
Yes, that's exactly what it means. So tactical asset allocation, there was a study done a long time ago in 1986 where they determined that about 93% of your performance comes from asset allocation and 7% from stock picking. Some may argue with that, but that study has been done a couple of times. And essentially, what we're doing is we're looking for areas of opportunity for growth and areas to protect ourselves in downside risk. And that could be among asset classes and that can be within sectors. But sometimes it's moving to commodities or liquid alternative strategies. Gold, for instance. We have an allocation to gold in our portfolios this year for obvious reasons, and we can talk about the thesis for gold, why it's done so well, and why we think it has a long runway ahead with the markets reaching peak uncertainty and ultimate fear trade. But yes, that's exactly it, Paul. It's about getting to, rotating to those areas that will do well in this environment and avoiding the pitfalls.
Yeah, let's talk a little bit more about gold. Is that the hedge of choice? Because I know you mentioned liquid alts, but is gold the hedge of choice right now?
It really is. Commodities more broadly have done okay, but not as well as, say, in a year like 2022. And quite frankly, we're looking for the economy slowing this year. And if we have a slowing economy, we use less commodities. Gold it stands out there by itself, even among the other metals and even precious metals. There's considerable central bank buying. There's considerable buying among private investors, even institutions. Because of that, there are a lot of reasons people have believed gold works over time, whether it's inflation, whether it's uncertainty, whether it's fear of what's happening in the stock market, whether it's a falling dollar. Guess what? We have all that right now. So the thesis for gold is very strong and will continue to be. So yes, it has become, certainly with the massive positive returns it's had over the last several months and really over the last more than a year, we've had just a considerable run and a great hedge in an otherwise, troubled market for stocks and even bonds.
David, thanks as always. We always appreciate getting your perspective. You've got a lot of experience in these markets, some excellent wisdom. We appreciate it. David Kudla is a founder. He's the chief executive officer and a chief investment strategist at Mainstay Capital Management. They are located in Troy, Michigan, a suburb of Detroit. I spent some time there back in the day. Good stuff.